you like, really keen to make sure that at the end of this hour together, you feel a little bit more confident about what it is, what crypto is, why students are involved, and also understand where you can go for more information, because it is a very large world and we are only going to cover the basics. And with no further ado, I am going to share with you my screen. And we are going to kick off. All right, so as I said, this is the session. If anyone's in the wrong room, please feel free to stay, and who we are, which we know. So these are the 5 main elements that we're going to cover today. Is just what on earth is this crypto business? How does it work? Why are young people in particular getting involved? The vast majority of people who are getting involved in Bitcoin and other cryptocurrencies are young people. What are the potential dangers of crypto, and how can you spot it in bank statements, which we know is something, especially for people, we've been hearing from people who are using our funds management system. How do you spot these things on student bank statements? So we're gonna look into being able to help with that. Just a kind of linguistics issue. There are different types of cryptocurrency, like Bitcoin, which you would have heard of. Crypto is the overarching terminology for all cryptocurrencies. So just in case there's some confusion, it's like crypto is mobile phones, and then Bitcoin is like Apple. Okay, so it's a categorization issue. All right, so what is it? So crypto is really the line between kind of gambling and investing, which is what makes the whole thing so damn confusing. It is really hard to know, because we are still in the very early days, whether people are investing in crypto or whether they're gambling with crypto. And as we know, there are major differences to the two. You will make up your own mind by the end of this which way you think it is. So at a very basic level, what on earth is it? So cryptocurrency is an internet-based medium of exchange, which basically means it is a type of digital money that you can trade. So it's like any other asset, and I'm going to stop doing air quotes. I just want to make it really clear that I personally, as yet, do not consider it an asset. Because assets have more of an intrinsic value, something that makes them valuable. So when I say asset, I want you to imagine I'm doing air quotes. I don't want to spend the whole session doing this. So just imagine that I'm doing that if I say the word asset. So cryptocurrency is a type of digital money that can be traded. It is decentralized, which means it is not run by any central authority. There is no government in the world or company in the world that operates cryptocurrency. Crypto operates on a peer-to-peer network. It is bought and sold between people, and the registration, the records of the owners of cryptocurrency sits on blockchain technology. You are going to be hearing a lot more about blockchain, and all blockchain is a secure ledger. It's a way of keeping track of stuff in a secure way. We are not going to get into that in a huge amount of depth. But if anyone's interested, there is plenty written on the subject. If you can imagine, blockchain is like the operating system on which crypto then sits. Okay, and one of the other major benefits of crypto, apart from being decentralized and being private and being decentralized and being secure, is that it is private. All transactions are recorded, but the traders, the people who are executing on those transactions, are completely anonymous. This is, of course, part of the reason why in its early days, cryptocurrency was primarily used to buy and sell drugs and guns and child labor and things like that. So it comes from not particularly nice origins because of its anonymity. There are thousands of types of cryptocurrency. At last count, there was 2,600 types of cryptocurrency. What we've done is we've listed for you the big ones. The big ones account for about 85% of crypto. So Bitcoin itself is almost the majority of all cryptocurrency trading happens with Bitcoin, which hopefully, or perhaps many of you will have heard of. And then the next few, Ethereum and XRP are the next big ones. Dogecoin, which had its moment in the sun a few weeks ago, is literally a joke currency that was produced for the purposes of a joke. This is the world that we are wading into together. So that's what they are. So there are two ways that you can get crypto. The one is that you can buy and sell it just like any other asset on an exchange. The second way that you can get it is that you can mine it. And when people speak about mining cryptocurrency, what they mean is that people have to basically, at a very basic level, solve complicated maths. And when they get it right, they earn a portion of a Bitcoin. For example, I'm using Bitcoin as the example. So you do this complicated maths, which requires an inordinate amount of computing power and energy, i.e. like electricity. And for that, and for all of that work, you then earn a Bitcoin or a portion of a Bitcoin. Bitcoin can't just be created out of thin air. It needs to be mined. So although there are people who are buying and selling it, it needs to be mined in order to reach the maximum number that will ever be in circulation, which is 21 million. As at February, there was 18.5 million Bitcoins had been mined, and about 2.3 million Bitcoins are left to be introduced into circulation. The reason this is important, although it is not a reason why people who are just looking to make some money are involved in Bitcoin, but one of the reasons that people believe that Bitcoin has a future, and that is something that I do tend to agree with, cryptocurrency is going to revolutionize finance to a certain degree, is because of inflation. So inflation, as hopefully everybody knows, is when there is too much money chasing too little stuff, and it pushes up the prices. Bitcoin can't ever be over capacity. You can never have too much Bitcoin. So it is a hedge against inflation. And it is currently being used as a hedge against inflation in the United States, where inflation is about to hit 5%. So Bitcoin it holds its value because there is a limited supply. Again, if there are any questions, please do pop them in the chat and we'll get to them. So that's what crypto is. We could talk about what it is for like a week. There is currently a conference in Miami specifically on Bitcoin for 5 days. So there's a lot that can be discussed, but that's all we're going to talk about in terms of the basics. So the real question, which everybody on this call is really asking, is why young people? Like, what is going on? So the quote here is from a young 19-year-old guy who was being interviewed by the Financial Times, who's putting all of his money into Bitcoin. And he's like, well, I'm either going to be rich or I'm going to be wrong, which I thought was a really interesting quote. More interesting is the fact that almost a quarter of students in the United Kingdom own crypto, with a further 1/3 intending to buy over the next 3 months. This is interesting for a range of reasons, including the fact that the prices are incredibly high, and we will go directly into an exchange so you can see it live. But this is not a fad when you've got a quarter of students who are currently participating. So what I thought would be interesting is just to chuck up some of the numbers that are out there. These are coming from 3 different sources. So a million UK adults bought or traded crypto during the pandemic. The pandemic has probably been one of the greatest things that's ever happened to cryptocurrency, because people are sitting at home, and in the United States, people were receiving stimulus checks. And so a lot of young people suddenly had cash from the government, and this is where a lot of it was going. It is the second most popular way to make quick cash for young people. 59% of them, however, admit that they don't have any means to be able to withstand a financial loss. So for almost 60%, 6 out of 10 people, if the currency crashed, they couldn't withstand it. That's really worrying in terms of people's mental health, physical health, and financial health. And that is part of what we are very concerned about at Blackbullion, is that students are not paying enough attention to what happens on the downside. 40% don't view losing money as a risk of investing, which again, very worrying in terms of traditional investing, forgetting crypto. 80% are relying on gut instinct and rules of thumb about when to buy and when to sell. The danger, of course, with that is that our gut instinct, when it comes to things that we don't completely understand and things that are completely unpredictable, like this, are almost always wrong. So that's again concerning. 27% of young people prefer Bitcoin over stock, which I could talk about for 2 hours, but I'm not going to. 40% believe that it's going to replace traditional currency, but 37%, roughly the same amount, believe that it's a scam. What we can understand from all of this is that a lot of people have a lot of opinions, a lot of people are putting a lot of money in, and a lot of people don't really know why or understand the dangers. This would be worrying if it was adults who are earning a monthly salary. This is very, very worrying with students who are getting student loans.
Vivi.
Hello, Danielle.
Hello.
Oh, there's questions.
Sorry, an echo. Just to have a look, there's just 2 questions in the chat. I just wondered if that might be a nice place.
Thank you. Let's have a look. Sorry, I was getting all excited and didn't notice that there's actually quite a lot of questions. Susie saying happy we're doing it. Welcome Susie, very excited. Will the slides be made available? Yes, they will. If you have not signed up to our newsletter, make sure that you do, because we'll direct you to where you can find it, as well as the recording. And then there's people, look at my team giving you all blockchain information. Fantastic. Do we know who set up the original complex equations? So the origin of Bitcoin is a global mystery. There is a I can't remember the man's name, or the name, Satoshi somebody, who could be a person, it could be a company, could be a group of individuals who invented it. But that is as much as we know. It is one of the greatest kept secrets on the planet. At some point, I'm sure we'll find out. I wonder how many students have thought that they've bought crypto but have been targeted by scams. Absolutely, we know it's a lot, because scams, and we will get to it with the dangers, scams are one of the biggest features of cryptocurrency. How do students make actual cash from crypto? I'm still not quite understanding that part. We're going to get to that, Karajeen, in a second. And there is the newsletter. So we're going to talk about how you make money out of it a little bit further down. Okay, so these quotes are quotes that are coming out of the money confessions that we do every month. We ask students to tell us their money confessions. The number of confessions around cryptocurrencies has skyrocketed in the 4 months that we've been doing money confessions. These are some of the quotes. I spent 80% of my wages on crypto every week. It basically gave me a heart attack, and I had to have a lie down yesterday when that came through. So this is what students are telling us. Okay, so why are they so keen? So there's a couple of reasons, and this is on all of us who are not Gen Zers. The reason why a lot of young people are delving into crypto is that, first of all, getting a hold of what we would consider to be traditional assets is incredibly expensive. Buying a home is out of reach for most young people, and they feel that it will always be out of reach. If you don't feel like you're ever going to be able to own a home, then you are looking for other ways in which you can make money, and crypto seems to be one of the ways in which people think that they can do that. There's this idea that you can beat the system because crypto is still seen as a place where the pirates get together. This isn't old white men. This is the Elon Musks of the world. And so wanting to be part of that kind of pirate revolutionary, let's change the world, let's beat the system, is really feeding very heavily into this. And there is a thrill and status that is involved, along with FOMO. If 25% of students are doing it, chances are every student knows someone who's doing it. That student is seeing those students make money and want to be making money too. So what's this? So there are a couple of ways, and this is to Kara's question about how people are making money on crypto. So as we said, it is an asset and it is listed on exchanges. Just like any other asset, although as I've already said, I don't consider it an asset, but just like any other asset, there is a supply and demand issue. So when you can buy it and you can sell it, and the difference between the two, sorry, I'm in a new office and the lights just gone out. Oh my God. All right. We're just going to do that. You can see me, right? No problem. So you buy an asset here, you sell an asset here, and that difference is where you make your money. It's exactly the same with Bitcoin or any other cryptocurrency. You buy it at this level, you hold, you sell it at this level, and this differential is where you make your money. It's kind of that simple, right? It's like any other asset. The other way that you can do it, which is more dangerous, is that you can do what's known as shorting a position. When you short a position, you make money if the asset falls. This, by the way, all of these are things that you can do with normal stock market assets as well as crypto. So with shorting, what happens is you buy and you borrow. It's quite a complicated, it's a complicated methodology, but again, you buy at a certain level and you sell at a certain level, but it's reversed. And that difference is where you make money. Shorting is particularly risky because if you call it wrong and the stock doesn't go, and the crypto doesn't go down, it goes up, then your ability to lose money skyrockets. You can lose more than you put in. which is one of the real dangers. And then there is fast trading, which is about taking advantage of short movements. So making 2%, 3% here, there, and everywhere. And I'm going to show you, we're going to go directly into one of the exchanges so I can show you just how volatile this thing is. If you have time on your hands, like students had during lockdown, you have time on your hands, you have some money, and you're sitting at home in front of your computer all day, we can't really be surprised that this is where students have spent, unfortunately, an awful lot of their money. So this is how you make money on crypto. Hopefully, Cara, hopefully that's answered your question, but please feel free to tell me if we didn't. So what are the dangers? So this is the reason why I say asset. Digital currencies, all cryptos, are highly, highly speculative. They are very, very high risk. And that's because they have no intrinsic value as it is known. So the example I use is, for example, you could buy Bitcoin or you could buy Tesla cars, which is a good example because Tesla and Elon Musk are very large characters in the cryptocurrency world. If you buy Tesla shares, those shares are backed by a company that produces cars. So if Tesla is producing 1 billion cars, they've got money coming in, that has real value. If in the next year they sell 2 billion cars, you can see why the company is worth more. You can see why the share is worth more, because the underlying asset, the company, has actual real value. There are real buildings, there are employees, there's stuff being sold, there's stuff being bought. There is a balance sheet that makes sense. That is what intrinsic value at the base level means, that it kind of makes sense. You can see where the money's being made. Crypto, there is zero intrinsic value. The value that comes from a cryptocurrency is because I want to sell it and you are willing to buy it. And the differential between the two is where I can make money. But it is purely about supply and demand of a thing that has no intrinsic value. There is no actual value in the Bitcoin itself. And that is part of the reason why the Financial Conduct Authority in the UK is so very worried about crypto, because it has no real value. It rides the mood of people who hold it and people who want to hold it. I'm going to pause there for a second and just see if there's any questions, because that's quite an important, point. Okay, good. We did answer the question. Fantastic. This Bitcoin roller coaster, I've taken this image. This is from the Bank of England's, bank. It's not particularly helpful, but there's a couple of pages about Bitcoin on the Bank of England website. And what they've done is they've shown the difference in volatility. Volatility, for anybody that's not familiar with the term, is about how much things go up and down. Now, when you look on the far left-hand side, the orange graph is the pound sterling, our British currency, between the period of 2014 and 2018, and you can see it went up and down, but the volatility is quite low. As you can see, the movements hug the center zero line, right? Oil, which is the blue in the middle, also more volatility. There's more movement around the zero line. So there's higher peaks and there's lower troughs, but it's still within a margin of probably about 5 to 7%. If you look at where the highest peak of the oil price is probably about 7, maybe 10%, and the lowest peak of the oil price is maybe 7 or 10%. So you've got an upwards of 7 to 10 and a downwards of 7 to 10. If you then have a look at Bitcoin over exactly the same period, you can see the volatility is significantly larger. The highs, as the wording is there, 65% in a single day. Now, with an intrinsic value asset, that simply does not happen. Simply does not happen. The currency is incredibly volatile. So on the downward, it's down 25%. And on the upward, it's up 65%. And this is the rub. If you had £1,000 worth of Bitcoin on that day, your £1,000 in one day would turn into £1,650, right? Easy money, easy money. That's the bit that attracts students, young people, anyone who invests. However, that £1,000, if it was going down 25%, is suddenly worth £750. That's the bit we don't talk about. That's the part that students and young people and a lot of investors in cryptocurrency are not understanding, is the downward trend is huge. If you were shorting, that's where you make your money. If you're going long, which is the opposite of shorting, then that 65% is the upwards. But you can see the volatility is huge, and volatility means that there is higher risk. Hopefully that's all clear. If not, please do ask the question. I'm going to move on. So the first major risk is around volatility. The second major risk is regulatory. The sector is unregulated. For money laundering purposes, it's regulated in the UK, but there's no regulation around how it's run, how it's sold, and how it's exchanged. If something went wrong, i.e. if it turns out that the exchange on which you are trading your cryptocurrency is a scam, and a lot of them are, the FSCS, the Financial Services Compensation Scheme, would not help you recoup your money. They would not protect you. This does not fall under the FSCS scheme. For anyone who's not familiar with FSCS, if you put your money into Barclays, for example, you put £80,000 into Barclays Bank, and tomorrow Barclays Bank collapses, the FSCS would make sure that you get your £80,000 back. That is their purpose. They work to an £85,000 limit. So just hat tip, if you've got more than £85,000, make sure it's in 2 banks with 2 separate licenses so that all of your money is protected. Cryptocurrency is not protected under the FSCS. So it is an unregulated currency that is not being protected. That's a big deal, right? The other side of the regulations is more of the kind of hearts and minds. Regulators around the world don't like crypto. There are a dozen countries, and that number is growing all the time, that will not allow you to legally hold it, buy it, trade it, or mine it. So the regulators, if tomorrow the Bank of England and the FCA said that they were not allowing cryptocurrency in the UK, we don't know what would happen to the millions, if not tens of millions of pounds that are currently being held in crypto. So we're really functioning at the whim of regulators who have already told us that they don't like it. So there's interesting stuff to happen there. The last one is that the market manipulation is huge on crypto. I've mentioned Elon Musk. Elon is kind of the flag waver or the flag burner, depending on the day. He's an interesting fella. But depending on the day, Elon Musk's comments about Bitcoin and Dogecoin have sent it flying or crashing by 20-30%. So there is market manipulation, some of it deliberate, some of it accidental. The mob mentality is alive and well in the crypto world. The third is kind of a catch-all bucket, which I've just labeled all other problems. The first one is it is absolutely dreadful for the environment. Absolutely dreadful for the environment. 40% of people believe that is true, which is good. I think that I saw at last count that mining 5 Bitcoins uses all the energy of Finland. Like, when we're talking bad for the environment, super bad for the environment. It is incredibly destructive to nature. There are also an awful lot of scams, as somebody popped into the chat channel. Because it is unregulated, there are no regulations. So there are all sorts of celebrity endorsements on social media, some of them fake, some of them real. There are exchanges that are set up. These are the kind of supermarkets where you buy and sell currency, which are fake. Again, unregulated, so no one's there to protect you. And because of the way that people hold their crypto, and they hold them in wallets or they hold them on exchanges, there are all sorts of fraud and phishing scams trying to get your keys, which is a digital key to access the digital safe that holds your cryptocurrency. Again, because it's unregulated and because it's fully anonymous, it is very, very, very difficult, if not impossible, to get that money back. There is a story from a few weeks ago where a guy didn't realize that all of his crypto was on a laptop. He had stored it, as do many people, on his laptop. The laptop broke, he threw it away, and he's offered something like a $10 million reward for anyone who finds it, because he's holding about $100 million worth of cryptocurrency on the laptop. This is not a safe way to hold your money. The last kind of other problem bucket around crypto is that it is very, very difficult to spend. There is the law of crypto, the old story. One of the first people who who was mining crypto back in the day, spent 10,000 Bitcoins to buy a pizza. It was the first ever purchase of a real life good that wasn't illegal, a real life good for Bitcoin. That 10,000 today would be worth something like 300 million. So I don't know how he sleeps well at night, but very few sellers will accept cryptocurrency. Tesla used to, then they didn't, now they will. So it's very confusing. It changes all of the time, but by and large, it is still not something you can walk into Selfridges and spend. Just going to quickly go to the chat. Okay, so the team is working very, very hard to give you all of the additional information that you might need. Thanks for that, guys. All right, so coming to the kind of the crux of it as far as students are concerned. So how do you spot it? So in order to buy cryptocurrency, you do what you would do with any other asset. You open an account and you put money into it. These are the most common apps that you may see on a student's bank statement when they are transferring money from their account into the app or into the exchange in order to buy the cryptocurrency. Coinbase is one of the biggest, and I'm going to jump us into there just so you can see kind of what it looks like. Coinbase, Binance, and eToro are the big ones that we are seeing students using, but any of these could be showing up on a bank statement. What would happen is I would transfer £100 out of my NatWest account into Coinbase, and that would show up on my statement accordingly. So if you see these words on bank statements, or if students mention it, this is what they're talking about. Feel free to screenshot it. And again, the slides and the recording will be available later, but just I wanted to give you some like numbers, some names that you can look out for. All right, so the flip side of kind of my very cautious skepticism around cryptocurrency is that there is a growing band of people, companies, and institutions that believe that Bitcoin is going, and cryptocurrency in general, is going to change the world, is going to change the financial system. And Rick, who I just think is interesting because he's of the Swedish Pirate Party, and who wouldn't want to be a part of that? But he is a very well-known fintech entrepreneur, believes that Bitcoin will do for banks what email did to the postal industry. And he's probably not wrong. I don't think it will necessarily replace kind of traditional fiat currency, but we're certainly not going to see the end of cryptocurrency. Bitcoin, maybe, we don't know which coins will survive, but cryptocurrency is certainly going to change the world. And so if students are going to do it, then how do we help them to do it safely? As you would imagine, my core belief is that the safest way to do anything is to know what you're doing and to get your knowledge and to get your education. We are producing an increasing amount of content about crypto inside the Blackbullion platform, just to explain the risks and just what on earth it is. The most important thing that people need to do is their research and get the knowledge base that they need in order to be making some of these decisions, which often involve a huge amount of money, especially when you're talking about students. So there's a few specific things that if you're speaking with a student, you should see if they understand. The first is, do they understand how the exchange through which they are trading operates? Is it legitimate? Do they know that it's legitimate? The ones that we've just mentioned, like Coinbase and eToro, they are, they are themselves regulated, even though what they're trading is not regulated. Do people know about the exchanges that they're trading on and with? Are they legit? Are they likely to collapse? Things like that. People need to understand that, and they need to do their research and spend some time understanding it. Do they know how to store their digital currency? As I've said, the guy who put it onto his laptop and then threw away $100 million into some garbage tip somewhere. Are they familiar with the digital security? Do they understand how keys work? Do they understand how security works? Scammers, and there's a lot of ransom that is currently being done using crypto. Understanding the safety and security is absolutely fundamental. Diversifying your investments is advice that I give. We do fortnightly student webinars around financial planning, which hopefully many of you know about. And one of the things that we are constantly driving home with students is that if you are investing, and with young people in general and people in general, and this is true for all of you as well, if you are investing, make sure that you're diversifying. If you are buying Bitcoin, make sure you're also putting into an ISA, right? So like spread the risk around. We could do 2 hours just on diversification, so I'm going to leave it there. But it is something to make sure if a student is investing in crypto that they do not have all of their eggs in the proverbial basket. To be prepared for volatility, and again, I'm going to show you the live graph, but as you saw with the Bank of England graph, there is immense volatility, and the only way to be able to sleep at night and watch your mental health is if you know that it's possible that your paper value of your asset could drop 30% in a day. And if you can't handle that, what is known as your risk tolerance, if your risk tolerance is insufficiently high to withstand that, you should not be getting into cryptocurrency. That's just the way it is. If you can't handle the ride, which is effectively a roller coaster, you shouldn't be getting on to begin with. And it is something to really try to drive home if it's a conversation that you're having with students. The other one is really to make sure that people understand that there are additional fees and charges that they need to be aware of when trading. It is and the sell, there are at least a half a dozen other fees that they need to be aware of. The most kind of important are transaction fees, deposit fees, also for holding within the exchange, withdrawing things, trading fees, and any escrow fees. So just make sure, again, if you're having a conversation with a student, that they are aware that on top of their investment money, that there are also all of these fees and charges that have to happen. So it's kind of, in conclusion, these are kind of my main kind of takeaways. Crypto is hugely volatile, completely unregulated, and super duper risky, right? Like that's the fundamentals of it all. But there are a lot of people who are seemingly making an awful lot of money. And there is a lot of fear of missing out. If you see that your flatmate is making huge amounts of money or saying that they're making huge amounts of money on crypto, it's not a massive surprise that you're going to want to as well. So we are fighting against a pretty heavy FOMO fever here. But crypto is here to stay in one form or another, whether it's Bitcoin or it's something else. Cryptocurrency is not going away. The best thing that we can really do is to help students understand the risks that they're getting into, the potential dangers, the potential downside, and make sure that they are diversifying. If people, not just students, if people in general are trying to put their money to the best use possible in order to grow their wealth, we should applaud that. But we should also make sure that they are doing it smart. Fast growth in money often also means that there is a fast loss of money. That is how the market works. That is how the market has always worked. This time it's not any different. It's just online. So I'll leave this up next. Just by show of hands, I'm just going to stop that. I hope that was kind of there's a lot of information there, I am aware. By show of hands, I thought that it might be interesting for 2 minutes to actually go into one of the exchanges so you can see it. Just give me a thumbs up or a wave if that's of interest. Otherwise, we'll kind of move on. I don't want to waste people's time. Oh, lots of handshaking. All right, fantastic. So let's do that. Because I just wanted to, sometimes you got to see it to believe it. So let's just, we'll come back to this. Look, I've blue peated it and we've prepared it one earlier. This is Bitcoin as of right now. This is CoinDesk, which is, as we've mentioned, one of the major exchanges that is being used. I have kept it in US dollar denomination, but you can change it into whatever currency you want. I like the USD because that's how I track it. Now, this is the last 12 hours, just to see how we read this, which is something that people kind of always look at this and kind of go, oh, there's too much going on. So let me just break it down for you very quickly. You can see along the top strip here that there are the 5 major currencies that are currently being traded. These do change, so it depends on the volume of trade at the moment that you go in. So at the moment, these are the 5 most traded cryptocurrencies. You can see Bitcoin is often the one that's here. Now you'll notice these are all 24-hour trades because it is currently 6 a.m. in New York City. So these are traded outside of regular trading hours as well as regular. So Bitcoin, you can see the current price for the summary is $40,029. It is up 2.3% in the last 24 hours. Ethereum is up 4.5% in the last 24 hours. XRP is up nearly 2, Cardano is up 4.5, and so on and so forth. So we're looking specifically at Bitcoin. So you can see here, this is the price. You can see the 24-hour change. The market cap, which is, and this is the same if you look at the regular stock exchanges, the market cap is the number of coins that are out there times the current price. So the market cap moves alongside the price. As the price goes up, so does the market cap, and as the price goes down, so does the market cap. You can see that the market cap is pretty significant, 749 billion. So it's pretty significant. And there's been a significant volume traded over the last 24 hours. So this is the last 12 hours, bearing in mind that America has been asleep. America, obviously, you know, Coinbase is based in the US. They listed on the stock exchange themselves. They had an IPO a few weeks back now. So most of America has been asleep for most of for like a lot of this 12 hours, right? So you can see that the opening here, if you hover over it, hopefully you can see that, was 40,300. The peak that it's reached in the last 12 hours was 48.37, and the low, which was a little while ago, was 39,000. This is the last 12 hours where you've got volatility from 41,000 to 39,000, right? So that's an 8% level of volatility in a 12-hour period. This is one day. So you had a low of 39,000 and a high of 40,000 in the day. Then we go to the week, right? And you had a low of 31.5 and a high of 40. So you're talking about 25% increase in a week, right? And I'm going to show you Tesco's for comparison, okay? This is the last month. Again, massive volatility. And this is the last 3 months. This is the last year. And this is since the beginning of time, right? So you can see that this current, period, right? If you bought at 60, which is where it was at maxed out, then you're currently at almost 50% down in the matter of months. Okay, so this is I think it's this, right? So 60,000 down to 33. Now, if you're a student and this is all your money, you've just seen the value of your investment drop by 50% in a matter of months. Okay, this is why it is so scary. On the other hand, if you bought here at 48 and then you sold here at 57, you've done a 20% or about 15% increase in a couple of weeks. Now, given that the bank is currently offering 0.01% on an ISA, you can understand the attraction. And that is the main point that I wanted to make. I just want to compare this. This is Coinbase.com. If you're interested, you can have a look at the other currencies. This is the joke currency I was telling you about earlier, Dogecoin. This is the volatility of Dogecoin over the last year, right? Literally almost zero, 0.0002 to 70 cents. So you're talking about like a 3,500% increase. And this is why FOMO is real. The flip side of it is, so this is Coinbase. If anyone wants to have a bit of a play around or wants to give themselves a heart attack, this is the place to do it. The other one, and again, we do this a lot with students doing our financial planning sessions. This is Google Finance. It is an excellent tool if you're just having a bit of a play around. But I want you to remember here, Bitcoin, excuse me, Bitcoin has a market cap of $749 billion. So let's put it into pounds so we've got a like-to-like comparison. So it's a 532 billion pound market cap. And now we're going to go into Barclays just because we've mentioned them before. The graphs operate in much the same way. If you have a look over here at the market cap, I don't know if you can see the highlighting here. The market cap is 30 billion. The market cap of Bitcoin is 530 billion. So Bitcoin is worth £500 billion more than Barclays. I just want you to let that settle in. This has zero intrinsic value. There is nothing behind it except for people who want to make money. This is one of the largest banks in the world that holds mortgages and investments. This is the old, this is the new. And this is why we have such an interesting challenge with students. I'm going to end on this just so you can see the volatility. If you look at 1 year, and it all operates in much the same way, if you look at the volatility of Barclays, Barclays has doubled in value, plus or minus, in the last 6-7 months from historic lows. right? Because of COVID. So if you look pre-COVID, you're looking at the difference between £2.50 and £1.50, pretty much for the last, like, look at that level of volatility and look at that level of volatility, right? Huge difference. As far as students are concerned, no money to be made, old white men, the system, the pirates, where the money is being made. And that, ladies and gentlemen, is the challenge that we all face when it comes to crypto. I'm going to shut up there and take questions. And just to let you know, obviously we've got more sessions coming up, but I want to take questions. But we've got next week and then 2 weeks and then 2 weeks. Next week, I'm going to be talking about day trading and investing. Then Kev from the Young Gamers and Gamblers is going to be talking about gambling and betting. And then the fabulous Dominic Thompson is going to be tying the whole thing together about why all of this is so very dangerous for students' mental health. So I hope you'll join us for all of that. I'm going to stop the presentation. Was that useful? Do people feel a little bit more knowledgeable, or at least a little bit more, got a bit more of a handle? All right, superb. So let's have a look at some of the, absolute pleasure, Shelley. So let's have a look at some of the questions. Sorry, hang on one second. Let me just, excuse me, you don't need to hear that. Okay, so how do they actually turn cryptocurrency back into real cash? You buy and sell it. So you buy and sell with sterling. Well, let's say sterling, right? So we've got a student in the UK. They take £100, they put it into Coinbase. They buy with that £100, let's say half a crypto, although we know that it's not, but let's say they buy half a Bitcoin. 6 months later, they sell that half a Bitcoin for twice as much money. So they get back £200. So it's like buying shares. It's like buying any other asset. You hand over money, you get the asset, you sell the asset, you get back your money. At every one of those points, you pay a fee, but that's how you turn one into another. It's just like buying any foreign exchange as well. If you're buying US dollars, when you go on holiday, you buy US dollars, you then sell your US dollars in order to get back your sterling. It's exactly the same. It operates like an asset, but as hopefully you'll be able to see, it's not really quite yet an asset. So that's how you turn it back. Really interesting, really glad, Shelley. Good. Would love to know more. Yeah, Zoe, I mean, we are learning all the time. There's a lot of books on these things, but hopefully that was kind of helpful. Had absolutely zero ideas, been helpful. Great, absolute minefield. Absolutely agree, Ryan. And part of the danger is that it is a literal financial minefield. People are losing fortunes of money. And what happens is people are buying when it's sexy, which is when it's high. And then they're selling when they're worried, which is the exact opposite of what you should do. You should buy low and then sell high. But because of human nature, people buy when it's exciting and then they sell when they're scared. And this is why people are losing money. As you can see, it does tend to recover, but you have to be able to leave that money in there and wait for it to recover, which, by the way, is true for stock markets in general, but we'll talk trading next week. Good. Pre-session, oh, somebody had a pre-session question. What would be your top tip for students considering investing? Okay, so my top tip, it won't surprise any of you, is do some learning. A lot of people have not even looked at what I've just shown you before they put money into it. Need to understand the risks, need to understand the fraud, scam, and regulatory framework, because that is really important, but need to understand that in any given day, crypto can go up and down 20, 30%. It can go up, but it can also go down. Can you withstand that? Can you wait until it bounces back? And will your stomach allow you to wait it out, or are you going to have a nervous breakdown? All right. And I've told students the story in 2008, because I'm that old, when I was in wealth management, when the stock market crashed. Many of you might remember the financial crisis of 2008. I had a client who called me in the morning and he was like, you have to liquidate, you have to sell my portfolio. And I said to him, dude, you're going to lose 15 million pounds by doing that. And he said, I didn't sleep last night. I punched my wife in the face this morning from stress. I can't have that. You have to dump my portfolio. Now, he had 150 million in the bank. This was not going to break the bank, but we cannot underestimate the level of mental health and distress that losing money under these conditions can have. And that is the biggest tip for students. That is the biggest tip for students. And learn, for goodness sake. Don't put money into something that you don't understand. It's crazy. It's easy to take out the cryptocurrency and to put back into normal bank account. Can they lose more than is in their crypto account? So Zoe, it's a great question. So you can very easily buy, right? Like I've just shown you Coinbase. To open a Coinbase account takes a couple of a couple of hours total. It takes 3 minutes to open, and then it takes them about an hour to certify for your identity. But literally, you could have the account open by the end of the session. You can then very easily put money into it, and you can very easily buy. In the same way, you can then very easily sell and very easily get back your money. But whether you get back all of your money or not is different. Can you lose more than what is in your account? It depends on how you've traded, and it's a much longer session. But as I mentioned with shorting, if you are shorting and or if you are leveraging, which means that you're playing with more money than you have. So under normal conditions, you put in £100 and then whatever happens, you then get your money back. So it's £100 or £80 and you pull that out. When you leverage, you put in 100, but it's as if you're playing with 200. So if you win big, but if you lose more than you put in as well. So under leveraging, it's a very complicated conversation. I don't want to be having it in 2 minutes, but leveraging and shorting are the two things you need to be very aware that students are very aware of. These apps, and it goes for stock market trading as much as crypto, allow people to leverage in a way that I believe should be criminalized. Young people should not be allowed to leverage if they don't know what it means, but they are. So that's, I shouldn't say criminalized, that's very extreme, but it is very naughty to be enabling students to be leveraging money that they don't understand. So yes, the baseline answer, Zoe, is yes, they can lose more than they've put in under certain conditions. So you've got to be really careful. Again, shorting and leveraging, those are the two things you want to be asking students if they're doing, shorting and leveraging. Can't comprehend how many people are willing to invest so much money in something that has no intrinsic value. Yeah, I mean, welcome to the party, agreed. But there are people making a lot of money, and FOMO is very, very real. I think a huge issue with crypto stocks is what to class it as when assessing for hardship funds. Tricky to know if it's an asset investment or bet. Yes. For what it's worth, investing in the stock market, certainly if you're investing in the FTSE 100, that is an investment. These are Barclays and Tesco's and Sainsbury's and Marks and Spencer's and BT. These are companies you've heard of. They have intrinsic value. The UK stock market has been around for 200 years, right? Like crypto, I think, is quite difficult. And I think every university, we will come to a standard, but we know different universities are doing it differently. Interesting if anyone's willing to kind of pop their comments down, just because we're short on time, about how they're doing it, or if there's a lot of interest, we will run another session for best practice, and maybe we'll bring everyone together. Danielle, maybe let's see if that's something that's of interest to people.
Sure.
Is there any way we can signpost students to do research before they put? So inside the Blackbullion platform, there is stuff about crypto, but honestly, there are a lot of resources online. I would suggest, however, that people don't do kind of TikTok and Instagram, and rather look at, I know it's really boring, but kind of look at the FT, look at the more traditional money write-ups. TikTok and Instagram is populated by finance influencers who one day are selling skincare and the next day are selling cryptocurrency. Like, be very, very wary of pointing students there. There is stuff in the Blackbullion platform along with additional resources. Lots of questions, loving it. Are you aware of any additional considerations for international students thinking of investing in crypto? So I am not. Crypto, because it is anonymous, is more borderless than regular money. You can open a Coinbase account as long as you don't come from, Iran. Like, honestly, pretty much any country in the world, and North Korea. I think there's only a half a dozen countries that are barred. So no, I don't know. I don't know. If people lose out on shorting, will they have to then input more money to cover their loss? Potentially, yes. Potentially, yes. If the market goes, and that, by the way, is as true of the traditional stock market as it is of crypto. Shorting in general of any asset class could lose you more than you put in. If crypto is here to stay, is there an appetite to regulate it? There is a huge appetite to regulate it. Huge appetite. The question is, because of the way it is done, because of blockchain, because the whole value of it for a lot of the purists is that it isn't regulated, what that would do to the currency. We absolutely know that crypto is here to stay. What we don't know is in what form, what coin, and under what conditions. Those are the things we don't yet know. I think another session on best practice would be really valuable. Okay, so if that's the case, let us know if anybody else feels that way. Just pop your hands up, and Danielle will get back to me after the session. We'll figure out how to make that work. best practice session. We've had to decline. Okay, so Paul says we've had to decline students for support who are putting their money into crypto and then can't access funds. It all comes down to students using their funds loans for essential purposes, and crypto would come under non-essential, although it depends how much a student is using for non-essential purposes. Thanks, Paul. What we'll do is we'll take all of the comments of people and pop them into the write-up so that you've got some of these as well. Yeah, just let us know what you're doing and we'll do a session on best practice. I'm going to close that because that seems to be all of the questions. Couple of if there's any final questions, please do pop them in because I'm conscious of time. I really do hope that was useful. My main objective here really, yeah, there you go. So message Danielle if you'd like that, and we'll get it sorted at the end of the next few sessions. Obviously, please join us for the next few sessions as well. The main takeaway on crypto is it is very risky, it is very volatile, and it is very, very appealing for students. And that is the calculus that all of you are going to have to do when students are coming to you. I feel for you because this is a very fast evolving space. But students and crypto are not going away. So the question is, how do we help them to make the most sensible, the most impactful, and the most safe decisions that are possible? I do hope this was useful to you. We've crammed an awful lot of information into a very, very short period of time.